How's it going, guys? Welcome to Capital Gains 500, and in today's video I'm going to be showing you guys how I made $90 trading Draftkings today. It was a quick options trade, and I'm going to be going over how I did it and how I was able to secure a nice easy payday. I think it only took me like 20 minutes. We'll review how it went, what was I looking at, my stress, my heart beating once I lost like $15. I think the most we went down to was like minus 20. It's not reflecting on this graph, but I'll show you because I already sold my call option. I won't have all the data, but we'll go through it in the time frame where I was at. Starting off today on June 2nd, stock market was pretty intense, pretty crazy, depending on what sectors you're holding. You did good or you did bad. In order to make the $90 trading Draftkings, I didn't buy any stocks. I didn't buy any shares. I didn't buy into Draftkings itself. What I bought was a call options. Options are ways to bet on whether you think the stock is going to go up or down. That's a very short gist of it. If you want a more in detail lecture on that, let me know in the comments down below if you want me to do a whole video on options and options trading. But for making the $90 today, what I did was I bought a call. And let me show you how I did that. What you can do is buy a call. You can bet that the stock will go up, or you can bet that the stock is going to go down. And these are the prices of what you have to pay for the privilege of owning that options contract. There's more behind the scenes to it, but just know that you're basically betting for the stock to go up or the stock to go down. And why would I put a call on a day that Draftkings actually went down? Well, let's take a look. Here's the quick overview of what happened. I bought two call contracts for $44 for June 5th, so very close to expiration, and I bought that at 6:44 a.m. I held that call contract for about 23 minutes and sold it at 7:07 for a new price of $1.95 per contract. I bought them for $150 and sold them for $195 for a nice profit of $45 each contract, and I played two, so I made $90. Going into the timeline, let's go over to Webull, and take a look at what I was looking at in this day. And we're going to look at it at the 1 minute timeline. Okay, so the stock market opened and Draftkings pre-market hours, I believe it was going up, then we went down. So this happened in a couple of minutes. Remember, I bought my call contracts at 6:44. So we're looking at a time frame right here, 6:44. And the reason why I bought it at this time was because I was taking a look at the RSI indicator. When the stock market opened, there was a huge sell-off really quickly, so we got oversold, and I knew some buyers would come in. So I was waiting for an opportunity. I was getting my account filled with money. I deposited $300 in today quickly, and then once I was ready, I bought in right here at 6:44, as you guys saw. A little bit, in my mind, more expensive. I did see it when we were going at around 650 that those contracts were worth less, up to the point where they were almost $1.30, $1.25, and I was just kind of like, dang it, am I gonna lose money? But then surely but slowly, the RSI did not leave me hanging. We started getting some buy-ins, and as you guys saw, it was at 7:07 when I sold my contract, which I started seeing high prices. I was getting excited. 7:07 would be 10:07 because we're looking at the Eastern time. So 10:07 would be 7:07 my time. So then I was seeing green, and I was like, okay, we're going up, I'm making money. And I sold it right here because it was one of the highest candles when I was seeing it. I wanted to put a limit sell for $2 the contracts, but I was too scared for them not to get fulfilled. I wanted to just lock in gains with my call, so then I just sold. And as you can see, the RSI was indicating that we were almost near the top. I didn't want to get finessed and then just start going down and lose my opportunity to secure at least $40 per contract. So I sold, but I did see shortly after that those contracts did go up to the most that I saw was $2.25. So there was a little bit more money to be made with the rebound of new buyers coming in the stock market. If I would have waited until just 7 more minutes, until 10:14 my time, 7:05 714, I could have gotten that to an extra $60 in total for maybe making a profit of 150. But I am not looking back. There is no shame in locking in early gains, some nice profit. $90 is what I used to make, you know, working at a job, working all day. This took 20 minutes. I flipped a contract, I flipped a call, and once again, the reason for that was because there was an oversell this morning. I was looking at my indicators. I was being careful. My RSI said we were oversold, and I knew we had to rebound a little bit. When we rebounded right here a couple of minutes later, I had the urge to sell my contract for maybe $40 profit, but I was like, okay, let me wait for a little bit more, and then that's when I showed you guys that right here, this little dip kind of scared me. This is when I was waiting for 10 minutes, 12 minutes, kind of scared, waiting, and then we started going up, and this is where I sold a little bit early, like I told you. But no shame, it took me 23 minutes for that trade to make $90 with 2 call contracts, and that is how I made my $90. Like I said, there was more opportunity to make a little bit more money, but why would I risk it? Why would I do that? No way, Jose. What I could have done after, like looking back, was if I felt that we were gonna go down, I don't know why, when you're in the moment, you can't. It's hard to think. That's why day trading is very, very hard. It's very psychologically draining, because I sold my calls. What I could have done quickly was, because we were going up, went in and bought a put contract. But at the time, I didn't know that. I didn't know I was actually hoping we would go up, because I'm holding shares in another company very similar to Draftkings, which is GAN, and that one was going down. But in my hopes for what I'm holding is to go back up. I didn't want to play the stock market anymore. I didn't want to do any more trades. What I could have done was quickly bought a put. And throughout the day, throughout a couple of minutes later, it looks like an hour, about an hour, it went to its lowest point of the day. If I would have bought a put, I could have flipped another 2 contracts and made another $100. But again, it is what it is. The RSI was not really indicating me. Actually, yes. The RSI was also indicating that a downtrend would be pretty profitable. I would have probably locked in gains here, but going, good profit margin for puts today. Let's take a look at what they are going for at the moment now. Puts became very profitable, 60% change, an additional $97. 97 cents per contract, but remember we multiply this by 10, so $97. Really, really good stuff for anyone who bought puts today in the morning before the market. Once the market opened, if you bought a put at market pricing at that time, you would have made some nice money. I did. I made $90, but like I said, what I could have done after my call contract, I could have quickly bought a put contract and traded for another $90, $100. But hey, after I made this $90, I was a little bit tense. I went out for a walk, because again, day trading is very tough. It's very hard to see the market, the graph, your money go up and down really fast, and especially with options, you can lose money super fast. So you got to be careful. That's what it's all about, being able to maneuver around the markets. I'm still learning. I'm still trying to get better at my trading. That's why I just started with $300. I did not get crazy and buy 10 contracts, because then my heart would explode. And that's how I did it. That's how I flipped a contract today with Draftkings on a call option. Surprisingly, it wasn't a put. I'm pretty sure a lot of other pros, a lot of people, a lot of pro traders, what they were doing is they bought puts, and I'm out here taking a risk just because I saw the indicator that it was oversold right away and bought a call. It turned out well for me, but now I know it's all about reflecting on your trades and knowing how to improve and keeping nice deep breaths and being strong in your mentality. I knew where my stop loss would be at. I was prepared to lose up to $50-$60, and if I went over $60 loss, I was going to sell and just recover at least $230 for another day and live another day and trade and try to make back my money. But luckily I made money right here in this little uptrend, like I said. I hope you guys enjoyed this video. If you did, leave a like. Let me know if I should analyze more of my trading options that I do. If you guys enjoyed this video, let me know down in the comments if I should make more videos on this. Did you enjoy it? Do you want to learn more about day trading? Do you want to learn more about options and how to trade options? It's a really great way to make some money, but it's really tough. Again, it goes really fast. Your money can go up really fast or it can go down really fast. It's all about strategy and learning and being patient and practicing with time. I really like Webull if you want to paper trade, and it's awesome for that. Robinhood did not give you that ability, and I personally, that's why I have both platforms. This honestly couldn't been done without both platforms, because Robinhood is so easy to do the orders and put the sells and calls and junk, going in and trading calls and trading. The user interface is so easy to use, but the graphs are not the best at giving you the most information, as you can see on the web platform. This is it, and obviously the same thing is on the mobile. Webull gives you all these nice indicators. If you don't have it, I'd honestly suggest you open it up, and if you want to open up a Webull account, I would really appreciate if you use my affiliate link down below. It would really help me out. It helps out the channel. There's nothing wrong with having both Webull and Robinhood. I honestly like both of them. Like I said, I really like Robinhood for the usability. I like Webull for the technicality. Looking at this here, using the tools that are available. If you don't have Webull, you would have to go out and look for all these other tools on another website or host. I don't know. But honestly, the easiest thing is to just get Webull, free sign up, and you get 2 free stock when you sign up. I hope you enjoyed this video. Once again, leave a like if you did. Subscribe for more stock market content.